Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Wednesday. In today's program, I want to talk about a certain analogy that a very well-known market analyst is using currently to describe his vision of the market, plus some other things which have come under horrendous pressure in the market as we have a lot of risk of appetite on dominating the markets currently. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get to it. So, fire and ice. Well, fire and ice is not just about dragons and, say families at war, across Westeros. It's not about that. No, I'm using fire and ice because it's an analogy used by an analyst who I've spoken about in the past. Okay, something he started to use. And in many ways, I have to say, I do agree with him on this. And the analyst in question is Morgan Stanley's Michael J. Wilson. And he's using fire and ice as an analogy of where he sees the market for the remainder of the year. Now, if you remember, I have talked about this individual in the past, and he was one of the very first analysts at the beginning of the year to predict that the market would be under a lot of pressure this year. And he got it. It was on the money for the good, for the first 6 months, he was correct. And at the same time, he also warned a lot of buyers that what we saw, that little rally, which ended in August, was indeed a bear market rally. And don't forget, I did a video on that as well. And I discussed my opinion on that, where I saw it as a bear market rally. But anyway, he's using this, the fire and ice analogy to describe his vision of where he sees the market. Now, he says that Fed's war against inflation is fire on stocks. Fire on stocks. Because obviously, as we know, ever since, obviously, Jay Powell said prepared for pain so many months ago. And then, of course, obviously, after his very hawkish tone in his speech he did at Jackson Hole, the market has woken up to reality that the Fed is committed against bringing inflation down to their target of 2%. And the only way they're going to be able to do that in their mind's eye is raising interest rates. So this is not holding it back. So he describes fire on stocks, because this is why we see stocks under pressure, because the market is accepting the Fed's not going to hold back. So all eyes now, of course, are on what's happening on the 21st of September, is when the Fed meet again to discuss interest rates. He's using the word ICE for slowing economic growth and consumer spending. Now, in some ways, okay, there's a two-part argument in this. I agree with him in some ways, because there is evidence that there is slowdowns in certain areas of the economy. But don't forget, we've had a lot of good US data recently as well. I mean, the job market last week was pretty good. It was stable. Okay, we saw a slight increase in unemployment, but in general, the job number was still a positive. And we had a very good US initial claims last week. Plus, don't forget, we've had a very positive non-manufacturing ISM non-manufacturing PMI, which came in a lot higher, and in fact was the second consecutive month of an increase. So there isn't a slowdown on that. But the last part of his point, consumer spending, we're seeing retails drop off. The last retail sales in the US was a negative reading. was a negative reading. So yeah, he does have a point about that. But like I say, I think we're going to need further evidence of that. I mean, all what's happening really at the moment when we're getting positive US data is just fueling more fear for the market. But the Fed's not going to hold back, even though we know this already. They've told us they're not going to. So this just fuels the flames, so to speak, that the Fed will carry on being aggressive. Now he actually predicts, Michael Wilson, he actually predicts that the S&P 500 could fall to as much as 3,000 points by the end of the year. And he's predicting a recession by the beginning of 2023 for the US. So he predicts 3,000 points for the S&P 500, which, don't forget, has been under a lot of pressure. He's currently trading at 3,910 points. So a little bit away to go, but that's what he predicts. And in many ways, since that bear market rally, which we talked about ourselves, came to an end, the S&P has dropped by 9% since mid-August. So there is a lot of pressure with that. At the same time as that, of course, as well as that, the NASDAQ is heading for its 8th negative trading session as well. 8th negative trading session. And that's currently trading now at the moment, 12,290 points. So yes, okay, so the stock market is indeed on fire, so to speak, but in a negative way, not in the positive way of using the word. Something's on fire. Okay. Other things which are happening as well. Bitcoin, because we have such a risk-off sentiment at the moment, Bitcoin is actually crashed to its lowest level since June. And in fact, the cryptocurrency market itself has dropped and lost about 1 trillion in capitalization. So it is very, very negative. In fact, Bitcoin is actually, like I said, I'm going to bring it up. We'll have a look at it ourselves in a minute. Bitcoin is actually down from 60% off its record highs. It hit in November, where it was trading, or actually hit the high around just over the $68,000 mark. $68,000 mark. Remember that, because we'll have a look at it now. And like I say, it is risk off driving this seller's market at the moment. Let's have a quick look at Bitcoin actually as well. Let's bring that up. Because there's something else I want to talk about, which is absolutely crashed as well. But anyway, Bitcoin, like I said, this is on a 30-minute chart. It's fallen under that key level of the $19,000 mark. There was a bit of support for it, which held for a while around $19,600. As you can see, it was holding there. It's crashed through that now. Okay, crashed through that now. It's currently trading now at $18,796. I see a key area of interest, a potential area of support of $18,438. And I think, that's going to be tested at some point in the medium to long term, because in the medium to long term, I think whereas the market continues this way, I can't see risk on returning to the market any soon. And I can even see maybe Bitcoin testing $18,000 at some point in the future. But anyway, there's something else I want to talk about, which is even more dramatic. Now, those of you who are kind enough to join me this morning, I was talking about the Bank of England monetary policy. And obviously, we've been talking about the sterling for a while because the sterling has been under an awful lot of pressure. Well, the Bank of England had their monetary policy, and plus several members, including the Bank of England governor, Mr. Bailey, were in front of Parliament asking questions in like a little committee. They do this. And basically, in a nutshell, they failed to impress the sterling bulls. They didn't give any positivity whatsoever. They didn't give any hints that they will do 75 basic point rate hike next week. And don't forget, the UK is fighting inflation, which is at 10.1% at the moment. Expectation of inflation going to maybe 13% by October. Citibank reckons it could go to 22% next year. So they gave no impression or no sort of hope to any of the sterling bulls. In fact, this is what Mr. Bailey said to Parliament. He said, "Don't take today's comments as an indication for what we may do next week." So there's no indication of a 75 basic point rate hike. Seriously, in the current climate at the moment, you need to give some bit of forward guidance to boost the sterling, especially with the sterling under so much stress and so much pressure currently at the moment. And again, they underlined their opinion, again, being very honest. There's nothing wrong with honesty, and it's best sometimes to be honest, but they underline their belief that recession is coming for the UK by Q4. Knock-on effect, what we're witnessing at the moment, the sterling, the cable, the British pound, US dollar falls to the lowest level since 1985. 1985. That's the lowest level. It's managed to bounce off a little bit at the moment, but the lowest level since 1985. And that is frightening. 1985. What was I doing in 1985? I'm trying to remember. How old was I? How old was I? I was I was 7 in 1985. 7 in 1985. So I think I was 7. Yeah, I was 7. But anyway, just have a look at the sterling and how frightening this is at the moment. And this is obviously Bitcoin still. Let's bring the sterling back up. And there it is, currently trading at 1.14258. And like I say, when it came down here to this level here, that is the lowest level since 1985. So really, that's the next key level. It's obviously bounced from that. We've had a little bit of buying from there, but at the moment, there's not a lot going for it. Remember yesterday, we did a video I called it the Trust Boost, which boosted sterling on this monetary policy. And I was saying yesterday, I think this is going to give the cable bulls or sterling bulls false hope. I'm sure this happy feeling is going to finish, and certainly the happy feeling is not just finished. The happy feeling is not just gone. It's got worse, and it has not been helped by the fact that the Bank of England did a very, very lukewarm performance to Parliament and has done very little to restore confidence in obviously the UK economy. So that's what's hitting the sterling pretty badly at the moment. And like I say, I'm very difficult to be a sterling bull at the moment. In fact, I've had one bank, I think it's a bit severe. I can't see it going to that level, but one bank is predicting that by the year's out, the sterling could fall to 1.06 against the dollar on the way to potential parity. I can't see it doing parity. I think 1.06 is a bit steep, but I can see it dropping further below this level of 1.1406. I can potentially see that happening, especially as things get more and more uncertain in the UK. Now, though the Bank of England failed to impress, there is big anticipation, okay, that another central bank coming up very soon will be doing a 75 basic point rate hike. And that is, of course, the ECB. The market is anticipating them to do a jumbo rate hike tomorrow. And the announcement comes out tomorrow at 12:15 p.m. UTC, followed 45 minutes later by the press conference. Because this is a big thing, and because I'd be surprised, and I'm going to be very surprised if they do 75, but I think the market is anticipating it. Because of this, and because it's a big event, I will be doing a watch along for this event, going online at 12:05, so 10 minutes before the event, so we can talk about it, go over several scenarios, what could happen on the announcement, and watch it together. So please come and join me for that. So that's it. The major events this week is all going to be really down to tomorrow, which is the ECB interest rate decisions. So that's going to be it's going to be fascinating. This is why I'm doing a watch along on that event. So please come along and join me for that. But there is something else happening. There is something else happening this week. There is something else happening, and it's pretty big, not as big as the ECB, but I'm excited about it. And that is the latest episode of #AskJames. Now, those of you who are not familiar with this new series, this series is broadcasted live, just like Tixee Live. But these videos are, instead of market-driven, instead of us talking about the market, looking at levels and discussing the story, what's driving the market, these videos focus on an educational topic. And that educational topic comes from you good people. So you send me in the topic, and I dedicate a whole live video just to do that topic. And tomorrow's topic, Friday's topic, okay, is introduction to trend lines. So far, I've done an introduction to market jargon for #AskJames. I did one last week on introduction to candlesticks, and this one is going to be done on trend lines. Big thanks out to a viewer October Zest 19 for your suggestion. I really appreciate it. Don't forget, please send in your ideas, your suggestions for the topics. And like I said, I will see them and I will do a video for them. So don't forget that. Hashtag Ask James tomorrow, Friday at 12:30 p.m. UTC. So please come and join me for that. It should be a really good one because I'm a big fan of trend lines. So again, like I said, I'm looking forward to doing that. So it should be a good episode. Markets, as they currently stand, FTSE slightly negative in the red, negative 0.14%. DAX currently trading slightly in the green, 0.09%. And Eurostock 50 currently trading also in the green, 0.57%. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or give me your suggestions for future topics on the hashtag Ask James. I mean, what do you think? Opinions on what do you think about the sterling? Do you think it can recover from this? It can recover? I mean, it has. I mean, the idea of it falling to 1.114 levels not seen since 1985, I think, caught many analysts. I mean, there was that young lady from Rabobank who said 114, so she was correct. We talked about her in the past, so there is that. And what do you think about the euro? You say the euro is still trading way under parity, 0.9936. Obviously, that's going to be the one to watch tomorrow with the ECB press conference and ECB interest rate decision. Should be really exciting. If you think of a question later, you can put it in the comment section either on Facebook or YouTube, and I will see them and I will reply to them and answer the question next time I'm on live. So don't forget you have that choice. And that will be, of course, tomorrow morning at 8 a.m. UTC, where we discuss the European Open, and obviously again at 2 p.m. UTC to discuss the US Open, and of course tomorrow the watch along, which is 12:05 p.m. UTC. So please come and join me for that. If there is no questions, not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video and found it interesting and you put up with me, I'm excited and over enthusiastic behavior for the markets, but I can't help because I simply love the markets. And give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.